Guys, today is on a Sunday, the 26th. So before the market opens, I wanted to analyze a few pairs that I'll be looking into this week. Currently, I'll be looking at Nzdcad and Eurjpy for the week. So I wanted to analyze with you people, though I've done pre-analysis before. So let's start. So Nzdcad, obviously, as you've already known if you follow this channel, I like to trade reversal patterns once in a while. So in this case, let's look at NZD card. Reversal patterns that I like are mostly double bottoms and double tops. So double bottoms are double patterns, double tops are M patterns. So in this case, I identified a very strong divergence of price and momentum. You can see on our daily time frame, you can see us printing these are low, then we print a lower low. So price has printed a lower low. Then when you come to momentum, the time the price was here, the momentum was here. The time the price went lower, the momentum went higher. So a higher low. So this is a formation of a lower low for price and higher low for momentum, meaning these are very strong reversal pattern. Obviously, if you took your trade around this place, I'd given analysis to some of my friends when the pair was trading when the price was trading around this place. So these people are already in. Obviously, I'm expecting them to exit at around 83 100-ish price mark, or 83 to 50. So on our daily time frame, we can see a very clear reversal pattern. So I expect the price will reach around 83 to 50 before it either decides to continue downtrend or it decides to actually make a real reversal to go to the upside. So we go to our 4-hour time frame. So I'll remove this one. I'll also remove the RSI right now. So okay. I like using this one, the curves, to show my double bottoms and double tops. So there is my double bottom. My target price should be around the neckline, so around 83 to 50. Here's my target. So I want us to look at how you trade such a pattern. So first off, you come mark the break of structures or swing highs and swing lows. These are okay. Let me use the highlighter. These are swing high. These are swing low. Here is a minor swing high. Here's another minor swing low. Another swing low. Then this minor swing high is breached. You can see. So these are new high. Then if you go to lower time frames, you will see that maybe they printed some higher low right now in low time frames. So for people who I shared analysis last week, they entered around somewhere around here. So then you can now see the price printing new highs and new lows. So you can now see that surely the price is reversing by change of structure. Remember, like I had said, you always identify change of trend by looking at change of swing highs and swing lows. If a trend is switching from bearish to bullish, you'll see price printing. The price was initially printing lower lows and lower highs, then it starts printing higher lows and higher highs. That's how you notice change of trend. So I wanted to show you, for those who are still not in this trade, there are very many opportunities right now that for you to scale in to this bullish trade. So you can see these are very clean swing high, and it has been breached to them. You can see it printed a swing high, swing low, swing high, swing low, then swing high. This swing high has breached this high, meaning these are a new higher high. So there's already change of direction for this price. Remember, when we see this pattern, we are looking to trade bullish opportunities only. Okay, so after the break of structure, so after break of structure right here, we print a new higher high. You can see. Then price has started retracing. So I gave another setup around here. So once price breaks the new high, I'll be looking for areas of interest to scale into my trade, which are basically, I do use the zones. So I did come and mark. You can see here there's an order block that was followed by a very aggressive bullish move. Here's an order block. It was a 4H order block that was followed by a very aggressive bullish move that came and broke this structure. So the when prices started retracing, I was looking obviously to enter at around that place. Another thing, I always the I identify the zone that I'll be trading in. I always do like to use my Fibonacci tools. Obviously, I'll trade zones that are below 61.8. So I do use the 70.5 and the 79%. Uh, the 79% Fibonacci zones. So you can see like this order block of ours aligned in both the two Fibonacci's. So this will be an area of interest. So this order block basically will be one of my main areas of interest to trade. So for the aggressive traders, they obviously were already triggered because they placed their, let me show you, they placed their, for aggressive traders, you always do put your buy limit at the beginning of the OB, then your stop loss a few pips below the OB, then your target. Obviously, the first target will be the recent high, which will give us a 1:3 risk reward. The second one is our main target, which is 83 to 50, which will give us a 1:4, 1:4.56 risk to reward. So that is one of our trades that we are already in. So for those still not in the trade, I want to look at scalping opportunities maybe tomorrow. So let's go down to lower time frames. So let's go to H time frame. You can see our break of structure. You can see our OB for HOB. If you go to these lower time frames, you'll identify other more precise OBs like this one here. So you enter around here. Your stop loss is below there. Let's see. For in our H2 time frame, there is our OB. So people who scaled in around there, triggered around there. Stop loss, I like to put a few pips below the OB to give us allowance of play. Then the first target will give you a risk reward of 1:4. The second TP will give you a risk reward of 1:6, which is a fair trade. So I did identify another double bottom here, a minor one. So let's go to low time frames, like maybe 15 minutes time frame, and look at this break of structure. So you can see in our low time frame, there was another break of structure. You can see these are a swing low, swing high, swing low, which is almost equal, swing low, then break of structure. Break of structure to the upside. Mm, price prints a new higher high, which is this one. Then price has started coming back to retest our OBs. So let's look at how many 30. So you can see in our minute 30, we have this OB right here before an aggressive bullish move. So let's highlight that OB, order block. Let's see if the order block aligns with our Fibonacci. The Fibonacci that I told you. From your swing low to your swing high. You can see that this OB does confluence with a 79% Fibonacci. So this will be another area of interest that I'll be looking to scale into. Let me first clear the charts. Let me also clear this other older OB. So another area that I'll be looking to scalp into, probably the market open. Here's our OB. So our first target will be a swing high right there, which will give us a risk reward of 1:6, which is a fair trade. The next place I'll be looking to get out, scale out, is obviously our main target. Which will give us a risk reward of 1:14.5. So we'll be looking at those two setups. So I'll add two positions, one for TP1, second one for TP2. Let's see how the market will play out when it opens. So the other pair that I'll be looking at, so I hope you followed. Do you recap? We started from our daily time frame. We identified our at our daily time frame. We identified our double bottom. We went to, for each time frame, we saw break of structure around here. Then we went to our 15 minutes we found another OB around this place that was tested on our 4H. Remember, our 4H started, our 4H OB started from around here to around here. Okay, then this will be uh, then we went to 30 minutes. We found another break of structure to the upside, so I'll be looking to scale into this place. Another scenario that can happen. Remember here there's liquidity, so markets can come break below here. So this one will affect the people who will be scalping, but the ones who took a trade with the 4H time frame will be safe. So for those who will be scalping this opportunity, remember there's a lot of liquidity around here, so prices might push below this liquidity area here, hunt the stop losses of bullish people, and then come. Remember here there's another OB. Let me just use the same. Another 30 minutes time frame. There's also this OB right here. So prices may come, hunt the stop losses below here, trigger this OB, and you get a trade, another scenario like this. So of which our first target will be here, around 1 to 10. The other target will be obviously our main take profit here, which is 1 to 13.86. So I've given you two setups that two scenarios that are already running. Then the scalp scenario, which will be looking to enter around here. Then the last scenario that I'll be looking to is in case prices come and hunt below these stop losses to take liquidity and then come and tap into this OB. So this will be our last scenario. Obviously, the other scenario is the market doesn't play out as we wish and it continues pushing down. So, and obviously all our scenarios will have been broken. So hopefully you'll benefit from this trade. And in case it fails, I hope you've learned. The other pair that I'll be looking into is Eurojpy. So Eurojpy, I first gave this trade the double top, this one and this one. I gave it around this place. Obviously, the target was at our neckline, so that scenario is already played out. We backed our take profits on Thursday. So let's look at what I'd seen in this pair. So in our for each time frame, I had identified a very strong reversal pattern. You can see these are an M pattern or a double top. You can see price printing almost equal highs, but momentum prints lower. These are high, these are lower high. So obviously these are bearish reversal scenario. I expect the prices to push back to 138.500ish. So that is my main target for this trade. So for people who aren't still in the trade, there are a few opportunities within the week that we expect that prices to retrace to those levels before they continue pushing downwards. So we've already identified the double top. Let's go identify our. Let's now scale into lower time frames and look for opportunities to scale into this bearish trade. So for those who have my WhatsApp number, I did share this setup in my. This is another double top of which of I gave it around this place, of which target was here. I have explained. Let's see now low time frames, 15 minutes. I've explained. Now we are looking at our OB. This was our swing high. This was swing low. We come put our Fibonacci. Remember, in my Fibonacci I always use 70.5 and 79.00 to look at the OBs that are in my area of interest. Take my that's where I do take my trades. So in this case, you can see there's a very this OB here right here aligns with both 79 and 70.5 Fibonacci levels. Then you can see after this OB there was a very sharp bearish move. Then you can see also there are levels of imbalances that haven't been filled. So obviously I did expect that the prices will come push all the way to fill these imbalances, and then we have an OB around that place, so it will be a very good OB to take our trade. So this will be my area of interest. This is the area that I'll be looking at. Let me remove the Fibonacci to clear the chart. So this will be the area that I'll be looking to scale into my sell position, my second sell position. So targets. Scenario one, I will scale into that trade right there. My stop loss is a few pips above my OB. Then my first target will be obviously the recent low. Okay, so this one will give us a risk reward of 1:6, which is a fair one. Inamaanisha for every maybe $100 you stake into this trade, you'll get up. You either lose the $100 or you win the six. You make a profit of $600. For every $1,000 you lose $1,000. You make a profit of $6,000. You understand the idea of RR? For basically, I was just explaining to the newbies. Then my second scenario, my second target obviously is the main target here. So I'll be scaling into two trades, one with an RR of 6, the other one with an RR of 14.9. That's around 15. Meaning for every $100 you stake, you chances are you'll bag 15. You either lose $100 or you bag $1,500 or you bag $1,500. So those are my two pairs that I'll be looking into this week. If they play out, good and well. If they don't play out, that's where risk management comes into place. Remember, the amount of capital that you have, secure it, calculate your lot size according to the capital that you'll be having. So thanks for watching. You can refer your friends to this channel also. Maybe if it's beneficial to you, maybe they will also learn something. Yeah, thank you.